Okay, I think we're live. I think I'm live. Welcome everybody. This is this is my weekly Bitcoin chart analysis. Sorry if I have not been doing it. I was enjoying spring break, and if you've seen some of my other live streams I've been doing, I've been playing a lot of games. So spring break is over. My youngest is at school again, so I'll be doing the weekly Bitcoin chart analysis. So a lot has happened since the spring break. So let's just get into it, shall we? Let's see here. Let me first of all show you my QR code if you are interested in donating. Here's my QR code for donations. Feel free to donate if you are enjoying my weekly Bitcoin live streams, if you find it insightful. I'm sure if you took some of the insightful information that I've been giving and you have been investing, purchasing, or enjoying the gains of recent, show a little love. That's all I have to say. All right, so let's start off on the weekly charts, shall we? This is Bitcoin Wisdom.io, I think. I'm not sure. It's been a while. Let's just go to the chart here. Bitcoinwisdom.io. And if you don't know what it is, it's just a free website you can go. Has very simple tools. I use it for my chart analysis. Most of what I do is just use the average lines for the most part and look at the candlesticks. The candlesticks, the price itself is an indicator. And if you just use, for me, if you just keep it simple, it's easier to read the charts, in my opinion. Just my opinion. It's not financial advice. I don't think you'll ever find anybody to give you financial advice on Bitcoin. So let me start with some lines here. Try to keep up with lines updated. These are the same lines I've been using. That line right there that I just put out represents the bear market. Happens every time after an all-time high, after a halving. If you don't understand that yet, you should probably stop trading Bitcoin and just buy and hold and stop trading, because you're never going to beat the market. But if you do understand the cycles of Bitcoin, and you understand how it works, you understand the fundamentals, the concept of why the price of Bitcoin it is what it is, if you understand how mining works and the correlation between the cost of mining and the cost of Bitcoin, you'll understand the fundamentals and you'll understand how the price action, you'll have a good idea of predicting the price action on a long term. I'm on a weekly time interval of 1 week, right here. This is Bitphoenix. This is what it's set up as. I think you can go to different exchanges, but pretty much you'll find that they're all similar. So I just use Bitphoenix for simplicity. I'm going to put out my Fibonacci fans. That's what I've been using. And there we go. And now I'm going to move. And you can see how it dramatically changes. It doesn't dramatically, but you can see that as I move the timeline, you can see some of the candlesticks changing in size. I could do that going back here. You see how it just changes in size to match the chart. It's pretty deceptive, when you do that. Look at these price, how they move, and then when I move it to the next all-time high, they're nothing. It's nothing. And then this, look at this price action. Looks huge. And then when I move it to the next all-time high, it becomes nothing, right? Just very little change. So that is the cycle that we're going to be in. So understand the cycles, you understand the price. So let me move it back again, okay? So I'm moving the timeline forward. I think, let me see, November, right around this time frame, right around here, somewhere right around this time frame, we're going to be expecting an all-time high. I'm thinking this time frame right around here that I'm moving the crosshairs. So this is looking good. If you look at it, now I'm going to zoom in just a little, zoom in a lot. There we go. Look at that. You can see the first Fibonacci fan line here. Look at the movement in price. It almost follows it. It really hit up against it, went down for a little bit, just a little bit. It did spike down. I wouldn't consider that much of a spike, but it did spike down a little bit. But the two average lines, I think I can confirm that the 10 period moving average has now crossed over the 30 period moving average, and you gotten a flip. There is definitely a flip in the average, and it's a bullish flip. How long will it stay? It's hard to tell because I would need at least three more candlesticks, 3 to 5 candlesticks to confirm it. By the time that happens, by the time that happens, you missed out. You missed out. So if you think we are in a bull market right now, if this is a bull flag, I'm already starting to see crypto YouTubers come out posting about the bull flag. Well, it doesn't help. It doesn't help after the fact. It would help before the fact if they can tell you what a bull flag, when a bull flag is happening. But nobody can ever do that. They can only tell you after the fact, or when there's the first beginning signs of a bull flag or a confirmed bull flag, which is then too late. So if you've been watching, you should have been buying right around here in this time frame during last year, December. You should have been. Another opportunity was around this time frame, around January and February. That was a really good time to buy because you started to get an actual first signal. Doesn't always mean that it's going to shoot up. I think that you got the first signal. Are you late to the game? No. You're getting your first confirmed bull flag, but you're not in. You're not going to get. It's hard to get it at a lower price because everybody's going to be expecting a higher price. So the waves have already started. You're starting to see the wave, and matter of fact, you'll start to see a high. So the price action has gone above this line here, which is higher than previous lower highs. So it's broken up against lower previous highs, a lower high right here, this lower high, and this lower high. So this price right here on February, the beginning of February as well. This big candlestick here, that is a very good bullish sign. Very good sign. It's a sign that we're getting some good strong confirmation. So this price is finished over. It's finished above all these previous highs, lower highs. The next target price for confirmation that we are in a bull market, we are actually in a bull market, will be this price right around here, which is 48,000. It's going to be around the 48,000, 50,000 price range. Once the price hits up and goes beyond that, obviously the next price you want to watch for is the all-time high. So this is what you're looking at. There's your bull market run. And once it breaks the all-time high and continuously make it an all-time high, and I'm thinking, 100,000 is a very conservative estimate, but it could go up as high as 300,000. I mean, it is harder. It's definitely harder to get Bitcoin. Many people have lost their private keys. They forget their private keys. They forget the password. They get hacked. They send it to the wrong address. I mean, lots of things can happen. Plus, the supply is diminishing. Supply is diminishing. We're probably, I would have to say, at least 90% of all Bitcoins have already been mined. We're just mining the last 10%, maybe even less than that. Another thing I'm looking at, and I'm looking on my smartphone, so forgive me if you don't see it. I'm looking at the mempool, and recently the mempool has really been flooded. Let me just refresh it to see where it is. Yeah, oh my god, the mempool is ridiculously high. And it's been high for how long? Let me see. Let's look at a 30-day. Yeah, it has been increasing. It's been increasing. So a lot of prices have been moving around. I haven't seen this in a while. So the mempool is increasing, which means more activity is an indication of activity. If there's indication of activity, that's indication of use, which is an indication. It doesn't mean that the price will go up. It just indicates activity. And if the price is going up, that it may correlate with people getting back into Bitcoin, crypto space. Yeah, the mempool is just increasing, ridiculous. So yeah, I think we're seeing the beginnings of a bull market. Does it mean the price is going to go up? Not necessarily. Prices don't necessarily correlate with the mempool, not necessarily. But it is a good indicator. It is a good indicator. So, um, will the price continue to go up? I think it will, with the caveat of there will be dips. There will be dips. The next price that it has to move is 50,000. So, right, what is it? About 28,000. It's about 28,000, 25,000. The next price is around the 50,000, 48,000. That is the next price in which you're going to have to wait and see. Do I think the price will crash every now and then? Yeah, there will be sell-offs. Uh, it comes in waves. The first waves are very small. When I say they're small, you have to go back in time. So what do I mean by that? Let's see here. Let's delete everything. So the first waves are small. Let me show you. See, like the last bull run market. The waves are small. They come very small, and then they increase, increase, increase. Now this looks very flat, but let's just increase. Let's just change it. The waves are very small. They come up, the first wave, then you got a second wave, third wave. The waves, they end up relatively small, and then there's a build up to a huge surge, And that's what typically happens. I can go back even further, show you an example. Let's go to this one. All right, first wave, very flat. This is what 2015. First wave, usually very small. Next wave, a little bit bigger. Then you get in the third wave, the fourth wave, it just starts to increase, and then it starts to explode. Wave after wave, wave after wave, it starts to really start exploding. When you look at it at the time when it happens, though, you think, oh, this is too high, this is going too far. If you understand the cycle of Bitcoin and why the price goes up, the cost of mining relative to the cost relative to the price of Bitcoin, relative to the supply and the demand, you understand why the waves happen and why the price will exponentially increase. It won't take much. It doesn't take much to drive the price up because there aren't that many Bitcoins out in the market to purchase. So people have to pay a higher price. Higher demand, lower supply increases exponential price increase. Usually, usually. I mean, I make it sound simple, and and it is, but why people make it more complicated with, you know, technical, overly complicated technical analysis, I don't know why. Okay, there we are. There we are, most recent right there. So again, I'm going to draw the lines. Drawing the lines and just putting the Fibonacci fans, right? Just very simple, very easy to do. Come out, and I can see it where it moves up. It dips a little bit. It even went below the price of the two averages, but came back, shoots up. This 10 period moving average, that is very strong. It looks very strong. Is a crash coming? Usually there is a crash. After a huge run up, there'll be a sell off. That's typical. Um, at this point, uh, buying the dip would make a lot of sense because the trend is starting to change. The trend is starting to change. Um, we're getting closer as we get closer to the halving, which is around March of next year. We have 1 year, pretty much almost 1 year until the halving. So does that mean the price is going to shoot up crazy? No, I don't. Doesn't usually mean that, but I do think overall, over time, if you are a very smart investor, if you're very experienced in the markets, the Bitcoin trading market, you're probably stacking your coins. You're stacking. You're buying on the dips. You're buying whenever you can get your hands on Bitcoin. It's hard sometimes. Like I said, what I think is happening is in the peer-to-peer market, people are buying it up. That dries up the available Bitcoins, forcing the sellers, forcing people who are selling and trading into Bitcoin to the exchanges and driving up the price. Miners are starting to supply as much as they can. And you got to remember, there were a lot of miners who might have, or mining companies that went out of business during the bear market or couldn't afford to stay in business anymore. And so there could be less mining overall or less miners overall. I think there's still a lot of mining going on. I think the companies that understood the cycles and made the right moves, they're still going, and they weathered the winter storm, the bear market. But overall, there could be less miners out there, less companies or less people. So, um, the supply may be bottlenecked to a certain degree. And if it's bottlenecked, I mean, you have nowhere to go but to the exchanges for the most part. And I think that's what's driving up the price because this is the price of an exchange. So it tells me that people are going to the exchanges, buying Bitcoin from the exchanges, driving up the price. So what's really happening again is street value, street market is going crazy. Demand is very high, forcing people to the exchanges. That drives up the price. The exchanges have less amount of Bitcoin, and it doesn't take much for the to move the price because they have very little, and that drives up the price very quickly. And that's why you get these very volatile spikes, also dips as well, but spikes on the exchanges is they have very little supply. And you have to think that there are more exchanges now than there were in the past. And all of them must have a certain amount of Bitcoin. So that thins out more of the Bitcoin. So less supply, high demand. And it doesn't take much when you don't have you can't say you have Bitcoin and run a Bitcoin exchange when you don't really have any Bitcoin because people are going to basically withdraw their Bitcoins. I think if you're trading on the exchange, you probably want to withdraw your Bitcoin. Leave the money. It's not even real money at that point once you give your money away. Buy up the Bitcoin, pull your Bitcoins out. And that's basically what's drying up the exchanges. And when they get dried up, they have to raise the price in order for you to put your Bitcoin into the exchanges. So that's what you're seeing here. You're seeing high demand, low supply for the most part. Is it going to continue like in a straight linear line? No, it's not. It will dip down, and you'll pretty much should you should take the opportunity on the dips. You should. That'd be a really good idea. But most people aren't. They're probably going to sell. The foolish investor, they're going to sell. Oh, G's here. I have school. Hello, G. Hello, G. I don't know if G can afford a, a one whole Bitcoin, but no matter what your age, no matter how old you are, you can buy Bitcoin at any price at a fractional amount. The younger you are, I would say the better. Put it on a paper wallet. Paper wallets are free. There are free wallet generators. There are free wallets that you can essentially get the private key from, and they're pretty safe. Paper wallets are free. There's a lot of paper wallet generators that I think are trustworthy enough that you can use. Use a paper wallet, store it away, wait about 5 years, and see what the price is, and you'll be surprised how much the value's gone up. Anyways, I'm going to end this stream soon here. And again, if you appreciate the insight I give you, what's my conclusion to the price? Well, if you look at the Fibonacci fan, you got a little bit more to go. The price is probably going to do the same thing. It's going to hit up against that Fibonacci fan. It gets to a certain point, you'll see a sell-off, maybe a little, dip. You'll see a dip, and then, of course, the cycle begins again. The wave begins again, where you'll get a higher high from the previous higher highs. You'll get higher lows. Again, 50,000, 48,000 is the next probably target point that you want to look for. That's the next real resistance. After that, it's going to be the all-time high, which was what, 70,000, around 70,000. If the price comes close to the all-time high, most likely, and it's done this every time, most likely it will break the all-time high eventually and make another all-time high. And my price prediction, 100,000, 300,000. I know you're thinking, wow, 100,000 to 300,000, that's 200,000 range gap there. I mean, yeah, it could easily do that. You got to remember the supply is very thin. It's very thin. It doesn't take too much for somebody to come in to one of these exchanges and just start buying Bitcoin and driving the price up. It does not take that much. Um, when you get closer to the halvening, people start realizing the supply will be reduced again. It's going to get harder. The price will go up. The price will go up. So watch out for that. Um, I'm already starting to see a lot of crypto YouTubers coming out of the woodworks. Okay, if you look at my thumbnail, that's a recent thumbnail. Bull flag. Look, the bull flag. The crypto YouTubers are coming out the woodworks now. Whenever you got the bull market and the funny thing is, they can't tell you when the bull flag will happen. They can only tell you after it happens. So all they're doing is simply just reporting. All right, you might as well just watch the news. But you're gonna see more of these crypto YouTubers come out. That's another indicator that you could be in a bull market. And what happens? There's a cycle. There's a social network effect when people trade in the crypto markets. The crypto YouTubers come out, they start talking about it. Usually that gets pushed out to people who are into the crypto markets. They listen to it, they start believing, right? They start believing. This is what I'm talking about right here. This recent thumbnail here, bull flag. They can never tell you when it will happen. They only tell you after it happens, right? They're just reporting. No insights. They always tell you, "I'm not a financial advisor. Take it at your own risk." Blah blah blah. They at this point, they're just a reporter. They're just reporting. You might as well just watch the news, because if they were good at chart analysis, at predicting prices, predicting bull runs and bear markets, they wouldn't be. They probably would not be making these videos. They will not be telling you when to buy, because the way you get Bitcoins at a cheap price is not telling people that there's a bull market coming. You want people not to know that, so you can buy at the lower price, because as soon as you start blabbing about the price is going to go up and everybody sees that, it drives up the price. So you're having a social network effect here, right? It's like a meme. This is literally, in some regards, a meme coin, I guess. We're spreading memes. We're infecting others with this idea that the price is going to go up. They believe it. They start buying, and then it's like your prediction is fulfilled. So you're going to see more of these videos come up. And when the price starts crashing, you're going to see people talking about why it crashed, and it's buy the dip. You're going to hear that a lot, buy the dip. Anyways, I'm going to end this episode here. I hope you all enjoyed it. I hope it was insightful. Um, if you just do what I did and you look at the Fibonacci fan lines, it'll probably follow that price. It'll probably follow that price. Will it follow it exactly? No, but after the fact it happens and you look at it in comparison to the Fibonacci lines, it will help you understand the price action. It starts making sense. The problem is everything is hindsight 2020. It will not help you predict. It will just help you make better decisions, better guesses. Overall, I think we are starting to see the bull market. We are starting to see the bull market. The question is, when is it going to hit that, you know, hyperbolic rate of just shooting up beyond the previous all-time high and making another all-time high? When is it going to go to 100,000, 200,000, 300,000? I can't tell you. I really don't know. All I can say is that there's a really good chance that it could, right? You see how everybody phrases their word, it could, it might, right? It's most likely. No one can really predict, because if they could, they wouldn't make a video about it. They would keep quiet and start buying all the bitcoins they can at the lower price and just sit back, let it happen, and then dump. But that's not how it works. There's some social network effect where there's probably some people that did buy right now. They need to go on social media, spread the word to get all of you to buy, to get all the greater fools to buy. Prophecy is fulfilled, and then they dump. That's usually how it is. But overall, in the big picture, the price will go up. It will go up very high. And of course, when it reaches the all-time high, which we don't know what the all-time high is or when it will happen, the only way you will know that, the only way you'll know when it happens is after the fact, hindsight 2020, and then you'll get the price depreciation. The price will go back into a bear market as the people who bought into it are trying to cash out. You'll have winners and you'll have losers, and the cycle begins again. Anyways, thanks everyone for watching. Next week, we're back on the next schedule. Hello, yellow. Hello, yellow. Rainbow is winner again. I don't know about that. I don't know if Rainbow's the winner. But good to see you, yellow. Anyways, I'm gonna end this stream. Hopefully you enjoyed it. I'll see you all next week. Please subscribe, like, share, comment, consider joining membership. Until next time, everyone, I'll see you all later. Bye bye.